Hello, this is Graham Bibby here from the Paradise Island of Phuket, where I am at the moment. I'm just giving some update here on markets, especially following last night's and yesterday's jitters in Asia and in Europe, and at the start of the US stock market. In fact, I got quite a few text messages and emails and Vibers and lines and WhatsApps as many people were watching the pre-opening market, the market opening, and were starting to get concerned and panic. Following all those messages, even I started to get concerned. But as you know, I work on closing prices because intraday movements can make you do things maybe you don't need to do. So I thought we'd take a look at the markets today and some of our holdings, and also reflect on where we are. It would seem to me that the markets are slightly nervous over the Ukraine situation and the possibility that if Russia intervenes, then America is going to intervene. But that is an outlier, a wild card, something we cannot predict. So for me, I have a system and I have to go with that methodology, because just as a potential scuffle between America and Russia, we would presume would be negative for the markets. Any back off by Russia could be positive for the markets. So it's all about a methodology, it's all about a system. So let me start off here. I have the Standard & Poor's 500. That's the US stock market, top 500 stocks. And you know, in January I was negative because I'm following trends. This resistance point was broken where this arrow is, the circle. This resistance point was broken here. This resistance point was broken here. And we were just going below this resistance point. So as stop losses got broken on our various holdings, we actually went somewhere in the region of 80% cash, depending on the exact holdings in your portfolio. However, again, this is a methodology, and the market psychology can move on a dime, and that's exactly what it did. It went from negative psychology to positive psychology, and when we started to rebound here, I then felt more confident to buy stocks that were giving buy signals. I did actually have stocks giving buy signals in this phase, and I just want to show you one of them. This is American Airlines. Look, it never stopped going up all through the January sell-off. And in fact, in February, it's not stopped going up either. But I didn't like to buy this stock in this phase because the overall market, S&P 500, was negative. So it might have been we have one or two strong stocks, but if the overall market is moving down, most times it will pull even the good stocks with it. So I like to play on the side of caution as far as you can in these markets. Now, last night, all this market action, if I look here, the market was 1857 at the high, 1834 at the low, and we've ended somewhere in the middle, or off the middle, higher than the middle, 1845. And if you look across here at the right, you know, my trend is my friend, and this is the pullback. This is the rise. That is the extent of the pullback on a potential conflict between America and Russia. So we move from below 1750 to 1875. 125 point movement to the upside. And last night we were down 13 points. Further, this moving average, which it fell below, we then rose to it, and if it was negative we should have turned over. We broke through it, we actually bounced off it here, and the moving average is starting to move upwards. So that normally points to the direction of the overall market, as it did all through here. See, this is going up. That normally tells us the overall direction of the market is up. Some stocks have had some serious profit taking, like Jazz Pharmaceuticals. However, the stock had moved up a lot since we first bought it. First bought on this breakout way back here where that arrow is. That is it at the level of around 60 last May. It's 156 now. This is one big down day here. Let me show you. This line here is the spread of the day. So it went from virtually 170 to below 160. And that line here on the right is where it ended for the day. So it came off the lows and ended here. Then the next day there was a spread, but it ended on the high, which was good. And then we had this down day and it ended on the low, which didn't look good at all. I was hoping for 160 to be the support. 150 was the next level, and I was looking to see if there was weakness last night. And as you can see, it followed the market down, but ended on the high. It's a bit of a mixed picture with Jazz. It now needs to start gaining some momentum, but the overall pharmaceutical sector had seen some profit taking. The Valiant Pharmaceutical, not quite in the same sell-off, but didn't rise the same as Jazz. Last May it was around 75. It's up about 100%. This is the correction. It looks like nothing. The moving average is still pointing up. The stock still looks fine. Skyworks, which unfortunately gave a sell in October. I think this was during the negativity to do with potentially the US invading Syria. And we actually got out on that day, and what happened? It turned around, started to go up, then it broke out of this. But because I'm unemotional and I have a methodology, I did buy back into Skyworks. Some clients said, you know, we've bought it before, we lost some money. But the fundamentals of all these companies are generally staying the same. They're undervalued. They're undervalued because they've got a low PE ratio to their earnings growth. And their earnings growth is superior to the market average. So Skyworks was actually up 2% last night. Jazz Pharmaceutical was up 2.88 last night. So this is good. This is strength in a negative market. So, you know, that's fine. Now, Facebook, you know, it did the merger. This is the trend of Facebook. And again, I first gave a buy at 25. We had signal to sell before when it was correcting here. I also signaled to sell when it popped here, because it jumped from 54 to 60 in no time. I thought there would be a correction. There wasn't. And then I was quick to get back in it. I'm not egotistic. You know, I have a methodology. I have a system. We just apply the system. So you could say at the beginning of February, we've moved, or the end of January, 60 to 72. So it's not too much to ask to pull back to 67.41. The trend is still up. And if this turns up for 2 days, the stop loss will be just below 67. So the trend is your friend. We stay with it. At the moment, I have no problems with the market. Now, let me just flip across to Europe, because I want to show you Germany. Europe had a really horrible session. Germany, this is the German ETF, which will represent the market. And where the arrow is now, that arrow tip is where the German stock market ended, or the German ETF yesterday. So, you know, it is below where I would have thought the stop loss should be 31. It's not the end of the world. I am obviously needing to watch things very, very closely. But overall, I don't see that as a problem. And then, just to cap off, in Asia, you know, I've been telling you about Thailand. This is the ETF last night, which was up 0.91%. The trend still looks up to me. Who else is calling Asian markets to be in an uptrend in these three? This is the Indonesian one. It was down a bit, but it's still in a positive uptrend. I've also mentioned before Philippines, and this is the uptrend since I called it at the beginning of February, 33.70. So everyone, I'm watching things very, very closely. I can't apply emotion to what I'm doing. I have to follow a system and a strategy. So for right now, let's quickly flip back to what I want to show you. Whoop. Hold on one sec. What are you doing now? This one. This is the Nasdaq. It's broken above this high. It's positive. 4250 is the support level. We marginally went below it yesterday, but we're back above it. Market still looks fine. That should be support. Normally when you break above a previous high, that means you're going higher. This moving average is pointing up, so that's fine for now. S&P 500, again, we've marginally gone below that top. We're straddling the 1850 level. We're 184573, but the moving average is moving up. Tonight will be quite important. And the Dow Jones 30, only concern is here, we've rallied off that low. This was a support level coming all the way 15,500. We regained that. We regained this support level. We're fractionally above this support level. And we need to be above that because this could be the point it turns over. But again, the moving average is pointing up. So right now, I'm following the methodology. I don't want to make a prediction. I don't want to make a forecast. I don't want to make a panic. The trend is your friend. So for right now, I'm sticking with it, and I hope you find that useful. Thanks for listening, and I will update you in a few days' time as market direction unfolds.